Good morning, guys. It's Max. How's everybody doing? Appreciate everyone for being here. All righty. All zero of you. I need to quit saying that. I just say that just because I don't know what else to say. But if there happened to be anyone there, I would have appreciated it. Let's just say that. All right. Well, let's see what in the heck's going on. Remember to share my screen this morning. Thanks for guys in my Discord, Tom and some other people that texted me. I appreciate it last night. Let's try to get a handle on what this market's doing, right? Where do we even want to start with this thing? I guess let's look at charts. I mean, the charts, it just looks the same as yesterday morning, a big gap, and I'm going to say the same thing I did say yesterday morning. If we get up into that gap, like halfway into that gap, it'd probably be a wonderful place to get puts. But now we have two gaps like that. So, I mean, it's interesting. So that's, so if we don't rally into the gap and we just keep grinding down, 510 is the August lows, August 5th, August 6th, something like that. And then 500 on the SPY is a low from May 29th, another target they might be aiming for, just for what it's worth. All right, that's SPY. Let's look at the Qs and let's look at Bitcoin, maybe gold. I have to have something that's some good news, right? We'll look at gold. I'm looking at the market in the other screen. It's no signs of life yet. Not even made an attempt to get back in the gap, but it's early. It's early. And even if it does, even if it got through the gap, it'd probably be a good place to sell. So that's what's frustrating about it. But that happens every once in a while. All right. So here's the Qs. I'm not going to switch charts again because it takes too long to come up. I've already put the orange boxes in. I put the orange boxes in based on where the pre-market, where I thought it would open. I'll adjust it to where it actually is. All right, so that's the Qs. Let's see. I should have had. Let's look and see what else is going on. Let's look at this. You want to see central depressing? Let's look at the Altiverse. Obviously, everything's pulling back. So the Altiverse, if you wanted to say something good about it, which would be hard, but it's only down 4%, where the average stock that it owns is down 7%. GameStop is up. All right. Anyway, that's Alti, ULTY. All right, LFGY down 3.75. The average stock is only down 5. I did notice crypto's not getting hit, or Bitcoin's not getting hit as bad, and sometimes Bitcoin leads the way, and so hopefully it's trying to pull us out of here. But in any event, this one's down a little less bad than some of the other ones. Now GPTY, gosh, this thing is absolutely killing me. I love this thing, but these stocks have fallen out of favor. It has Apple in it, which was down, way worse yesterday. It's down 2% today. This has AMD. How could AMD be down another 6%? Wasn't it down 10% yesterday? How many more percents can I have left? How many more percent could something drop? My gosh. Marvell, Planeteer, even Intel's down. All right, well, GPTY down 4, average stock in its universe down 4. No buffer apparent there. This lack of buffer in GPTY verse. All right, here's the index buffer report. I'm guessing SVOL and ZVOL are not going to look good because China retaliated to our tariffs overnight, and VIX volatility futures hit a new high. Now they've since come back, but sure enough, ZVOL and SVOL. ZVOL's down 6% and SVOL's down 4%. I always say that Z-Vol is about twice as risky. It may just be more like 50% more risky, but you kind of see it on big down days. It manifests itself on big down days. I just use twice because it pays about twice the yield. You can use yield as a pretty good proxy for risk in high yield funds. If one pays 40 and another one pays 20, the one that pays 40 is twice as risky. I mean, other things being equal. So anyway, and in this case, these funds are other things are pretty equal. So I think it's a decent comparison. All right. Well, SPY-T outperforming on the downside. So is SDT. It doesn't even matter. Everything's to be outperforming. What's looking good? Y-SPY out of the bunch is looking pretty good. 5E. 5E's a fire fund it's a YieldMax based, or not YieldMax, just the people behind YieldMax brought out a fire branded fund and looks good today. JEPI looks relatively strong, of course, because it always does. There's just not a bunch of good news. I mean, triple QI is down less than any of the other NASDAQ-based funds, so that doesn't surprise me because it has the biggest buffer. The buffer creates the downside protection. The buffer also creates the extra depletion, so the buffer is the depletion, but it also cushions you in a down market, holds you back in an up market. Well, anyway, triple QI, you're doing your job today. YMAX just, not looking good. YMAX, SEPI, and GPTY all down about as much as SVOL. Clip is really taking it on the chin today with the 34% retaliation, I guess. The China news that hit at 5:30 in the morning. Boy, THTA is really taking it on the chin as well. That one sells. That one, if you've ever done iron condors, I don't like iron condors, but you sell kind of far out of the money, generally puts and calls on each side. But whenever the market moves really far, it is usually down. It will hit your puts, and it's miserable. And that's what's happening to THTA, and they're having to roll them out. And the guy that runs that fund is named Derek Moore. Last time this happened, he's one of the guys that runs it, but I think it's kind of his baby. Last time this happened, he wrote an investor's note on the website. I'll check and see if he has one this time, kind of explaining the rollout process and what happened and stuff. I will say this. Last time they were in August when THTA was down. Let's look at this. THTA. Or actually, we're going to look on FinViz because this one's too slow today. Let's just check out FinViz in August, THTA. Probably people are also selling it today that don't understand how it works. What I'm saying is, even though it's down 7%, it's probably only really down half of that or something. By tomorrow in August, it was down like 10% for a day, and the next day it was down 5%. People that didn't really, I don't know what happened, but people panicked, and that's what happens. And these, kind of surprised. I want to look at the AUM and some of the higher flying ones, but we really haven't seen much AUM come out of these. I mean, other than because the market's declined. Some of them have a little bit of assets come out. All right, well, but I'm hoping some of the higher leveraged ones like Misty and stuff that don't set off margin calls or haven't already or cause some kind of cascading problem. Okay, on to THTA in August. Probably first thing in the morning that day of the shock, it was down this far. That's 1679. In 2 days it dropped $3. In 2 days it dropped $3. But I just feel sorry for people that panicked and sold it that day. The real drop was about to here. That's not. You can see kind of where it snapped back to. It was a total overreaction. Even if you want out of this darn thing, wait for the snapback because it's just the ratios are stressed right now. I mean, obviously that's what happens, and that's what happens when this kind of stuff happens. But anyway, anything you guys want to talk about, I'm always open to suggestions. Dan, I appreciate you being here. I can always count on you. Jack hasn't even made a whimper this morning. So yeah, Dan, yeah, you would. We can only, yeah, you meant today. Well, hopefully today, right? So far so far I'm watching SPX and the granddaddy option, the actual big index, and it's just going straight sideways. But I'll say, I mean, this is the same story as every day. If we need to get above about 5,300 and we're into the gap from last night, and we could get to 5,350 and we're halfway through last night's gap. It would take 5,400 to close last night's gap. Even if we got to 5,400, and for people on the SPY, that'd be like 10 SPY points. I mean, it can happen, but it's kind of rare. Even if we got there, then we have other areas between 5,500 and 5,600, another gap up there. So bulls definitely have their work cut out. Anyway, okay, so good news is your Hibbs is kicking butt again. Yeah, we just need to do whatever Tom did last time. I'm sure Norman probably made some smart moves too, but I want to do whatever Tom did. Tom hedged everything a few months ago, or hedged a lot of his portfolio, and got CTA and a lot of non-correlated stuff right now. Well, the non-correlated stuff, and that's where I'm kind of weaving back around to. Hibbs is non-correlated and it's doing great. Good job. Good job. Yeah, happy Distribution Friday. I noticed it's one thing we haven't checked out yet. Let's check out the model portfolio. We're going to have to get a new data analyst here at Maximum Media, because the past couple of, even though I don't like spreadsheets, I'm, gosh darn it. All right, hang on here. Even though I don't like spreadsheets, I'm an accountant's son. So every day at the end of the day, I try to make sure that my spreadsheet ties to the Tasty Trade, because it's not directly linked. But I put my Tasty Trade end of day balance in and then put that on the spreadsheet and see if it ties. Well, it didn't tie. I actually checked it before the open this morning. It was off a little bit. Well, then I ran it down. It's because GPTY had not opened yet, but I see now that it has. Okay. So, yeah, my Tasty account was showing me down 2.4, but I was only showing down 1.6. I generally try to check that to make sure this is up to date, but yeah, this is down 2.4. So I'm not doing that well today, especially compared, it's compared to the SPY. It's down 2.8. I mean, but yesterday I did way better than the SPY, and a SPY bond, a 60/40 portfolio is down 2.2. So I'm even underperforming that. And I'm also getting shorter. My short allocation on YQQ is up to 26.5%. And my long allocation, like Alti's, dropping. I saw you earlier this morning. It was at 17. It was at 17 something. It bumped up a little bit. These go up and down as these things lose money. But freaking Alti and GPTY have been getting killed lately. What are you going to do? But they pay huge yields. Like Norman said, happy Distribution Friday. The yields that are coming off these things are going to be epic. And it goes to buy more shares. And then when the market recovers, you guys know how it works. I just don't want to sit here and take it on the chin the whole time. So that's why I got this YQQ and Fiat. But look at Fiat. It's up 4% today. I put it. It's up 4% today, and I'm allocated 4% to it. So I'm up. Okay, I'm sorry. It's up 4% today. Dips is up 0.5% today. That's really not doing much for me, but the Fiat is really doing me justice. Let's look at Fiat. We don't look at the inverse as much. It's not something I'm really proud to be in. I mean, I'm not trying to retire on an inverse. I want to get rid of it as soon as possible, or use as little as possible. Maybe like we talked about on yesterday morning's live stream, when we get back above the 200-day, maybe pull it back to 10% on YQQ instead of 25%. I mean, I'm kicking myself this morning for not going more on, 2 weeks ago, making a bigger allocation of YQQ. I mean, it's been ugly for a while. It wasn't looking good 2 weeks ago. It's just getting worse, but it always looks worse before the bottom. I always caution people. So, all right. So on this one, fiat. So look at this thing. This thing's gone straight sideways. So for a yield fund, I mean, and it's gone straight sideways the whole year of 2025. Well, let's see what Coinbase has done. And I'm sure Coinbase is, boy, it's remarkable watching. That's why I have the volume up a little bit. It's history making on days like today, but also back in 2020. But the market, but and CNBC forever. But yeah, Cramer was going crazy this morning. He's just fit to be tied. He's as nuts as he was in 2008 when he was saying they know nothing, and he was right. The Fed knew nothing, and the market's just about ready to make a new low of day. So, but anyway, but Cramer this morning was basically pleading with the president. The president watches this show and Fox, and the president will tweet about stuff they just said. I mean, and he did this morning. And anyway, Cramer's like, Mr. President, it's not too late. Now Cramer, now I'm not saying he's historically the wrongest person ever. So that's, but I'm saying it's not just him. A lot of people in the financial press and in finance in general, are wondering. So anyway, it's whatever. I'm not a political commentator. I'm a financial commentator. I'm trying to be a financial one. Anyway, we're on a new low for the day, so that's great. So we're probably going for the August low. So let's go back to the charts, or charts will probably take forever to load. I'm going to actually punch in SPY, and then we'll go do something else. And then we can come back to here. But yeah, I said I was going to do this yesterday, but look at this. So I bought YQQQ at 1681. It's trading 1833 right now. I need to knock off probably 6% of that, 6.4% of that after I get out of here, just because of the higher price. And it doesn't have to, and just put it into something, and probably put it into freaking a little bit of YSPY and a little bit of who knows. But maybe add a little bit to GPTY and Alti, maybe average down a little bit, but rebalance that, because I'd rather have everything around 20. I guess that's the solution. Take 6 out of YQQQ and put a little bit into Alti and GDXY to bring them up to 20. That's what it is. Easy peasy. I'm going to do when we get out of here. Okay, so that's enough about me. Who cares about me? What are you guys doing today? We are in a slump. I'm looking at, okay, so, hey, Mark, I don't know if I said good morning, but good morning. We are in the Trump slump. I'm loading up on LFGY. LFGY is doing great comparatively. Compared to the other ones. VITX, does anyone have any inverse? And I'm not saying get it now, but has anyone been writing any inverse? Is there any inverse Bitcoin stuff that people trade? And I know Ethan right here is, don't you? You're probably long semester triple Q, or you were long. Don't you day trade the inverse triple yields, or not yields? The inverse triple whatever they are, triple leveraged. I'm so obsessed with yield. Anyway, yeah, no, I'll probably. It's just a numbers game. It's a numbers game. The YQQQ's done great, but it's not going to do great forever. So. Maybe I'll wait till the end of the day, though. We're on a new low. Generally, that's what I've been. We'll probably wait till the end of the day, or maybe wait till the first thing Monday. They always say, or they've said before, markets don't bottom on Friday. That's an old adage. And the thing is, I'm especially worried about that times whenever there's wars overseas. Let's go back to the SPY and see what it's doing, or but because lots of times, if they are going to do something overseas like we did last weekend, they'll do it right as soon as the market closes to try to alleviate the shock. But then you have to deal with the Monday morning. But yeah, I'm not seeing. Don't think a lot of people will probably be wanting. I could be wrong. Maybe if Trump, barring a Trump tweet, But I don't think a lot of people, barring a Trump tweet, which is probably not going to save us, not going to happen. I don't think a lot of people are going to want to be holding this. So at this point, maybe we are looking for a Monday or a Tuesday turnaround. But I know I've said that every day this week. I'm just kind of eternally optimistic, but it's, sometimes optimism or hope's the only thing you have left. And really, if you're a bull, that's really where we're at right now, unfortunately. So, all right. Well, what else do you guys want to look at? Yeah, I know it. I know it. I'm watching it too. Get this, Mark. And I'm thinking I'm so smart for being hedged or something. But last night I checked my Tasty Trade and it was down because my sheet was wrong. I thought it was only down 1.5 yesterday also or something, but it was actually down 1% more. I had something wrong. I fixed it. But yeah, as I was thinking 2.5%. That's a lot, and I'm hedged, and that's something I'm proud of that. What the heck, because the market was down 3.5. But I mean, yeah, it's crazy times. It's crazy times. All right, well, let's talk about something that we can control or something I like to talk about. Well, we haven't even thought about looking at the option flow yet. Let's see if anyone's buying anything. Let's just do this. Let's look at option strat. I had a couple trades I wanted to show you. I want to talk option theory for a while, or just for a second. This trade, does anyone know what this is? It's an out of the money calendar, or it's actually a diagonal. It's a put diagonal. Now, traders do these trades because they're long volatility, and so a person can do this trade, and it's a hedge. But anyway, this trade costs very little. It costs $71 a contract, but if Microsoft cratered, and it cratered worse than it would have. Than it did. This is for a total meltdown scenario, 3 standard deviation move or something. This trade could be worth, $8,000-$10,000. But anyway, I've always heard about trades like this. I've always heard that hedge funds will hedge with put calendars. This was like $1 million trade, so I just saved it. I think that kind of stuff's interesting. I also saved this was a big trade the other day. And this guy, I thought it was stupid, but obviously who was stupid? I was. Or I still don't understand the rationale on it, but this was prior to yesterday, somebody wanting to be long volatility, so they bought a straddle. Well, they bought a straddle in volatility itself. So volatility was trading at 20, now it's trading at 30. So, they had a big valley of death. You can see they needed to get it past, for this trade to be successful, it needed to get past 24 on the upside or get past 16 on the downside. The only thing I didn't understand why even buy the put side. I just don't remember a time where volatility has gone down too fast. But these are crazy times we're in. And I guess, though, if that tweet that we're all thinking about, or if the war got solved or something, volatility, I guess, could technically crash. And maybe this, anyway, whatever this guy did, it was the right thing to do. Anyone could have done it for $324 debit, and now it's on second base right now. It's a double. So I thought that was an interesting trade. I've never. That's also probably a hedge fund. That was a multi-million-dollar trade. And Jay will tell people don't trade VIX. Retail shouldn't trade VIX. There's reasons, but it's not really that interesting to talk about right now. Let's see on the live flow, and by live they mean 15 minutes ago, but. This is a 902. The market's, it's not making a new low on the 5-minute chart, at least. The 5-minute chart is bottomed or trying to bottom. Let's see what people were doing a few minutes ago. Selling puts, selling. Let's do this. I do this. Let's just only look at stuff that expires today or pretty darn soon. And let's only look at out of the money, lots of volume, lots of open interest, and above the bid or the ask. What are people really wanting? This guy right here sold $800,000 worth of puts. This guy, on the other hand, bought a bear put spread. Which guy's smarter? Well, let's just open this one in Builder. Let's see when this expires. And I have one of these, but mine's a Q. I have a Q put spread that I'm going to take off today, but I'm probably waiting for the end of the day. I mean, or I don't know if it starts rallying, I may take off before that, but I don't know. I was kind of hoping it might, but so this is what this guy did. This goes out to next week. This goes out to Wednesday. 20% chance of profit. So it's a 1 in 5 chance of profit. I love these kinds of trades. It's pretty close to what Jay does with GPTY. It's not. I know it's not helping GPTY this morning. I know it's a sore subject, but they have this trade on, this type of trade. Interesting. So this is for a pretty, catastrophic situation. It's $150. And if you get the move, and it's just all you need is a 1 standard deviation move. I mean, it's not too outlandish. 1 standard deviation move, it gets you $500 on $150 investment. And then a 1.5 standard deviation move gets you a 10 bagger. So a big move gets you a 10 bagger. So it's not the worst. That's not the worst hedge. Well, let's just, you want me to share that? I'll put that in disc. I mean, it's not the worst. It's a 1 in 5 chance, it's not the worst trade I've ever seen. Let's copy that link and see if anyone wants that. Good morning, Retire on Dividends. I appreciate y'all for being here. Okay, well, I'm trying to catch up with this talk. What's JG saying? Surprised it didn't go into 70s while everything else was selling off harder. Oh, looks like Bitcoin bottom. Yes, Bitcoin's been relatively stronger. Bitcoin runs the market. I mean, this market's looking for a bottom. It's just, there's no way. I know I said that yesterday, and I know I said that the day before. There's no way we don't. But anyway, I try to separate what I think. I mean, but at the same time, when it actually comes time to trading, when do I take off those puts? I mean, I think I'm going to wait till the end of the day because it's, in other words, regardless, because if I would have gone what I would have thought, if I would have traded on what I would have thought, I would have taken the puts off yesterday. How do you think that would have made me feel this morning? So anyway, it's my puts. Yeah, I made pretty good money, but I have a $600 hole in my pocket from that one lot freaking Restoration Hardware trade I did. I'm like, gosh. I mean, so anyway. All right, so let's look here. I wanted to do one other thing this morning. Then I'm going to let you guys go. I want to show how to do one other thing. Somebody requested that I showed a trade a few weeks ago that showed how to hedge with volatility. Tariff hedge, get paid 20%. It was a take your right to dinner trade. Anyway, so actually I talked to somebody last night that did this or something like this. Or anyway, okay. It's a standard 3-leg. What I always do, you're selling puts to buy calls. It was, and you had about a 5% buffer and break even, whatever. Obviously, everything looks great in hindsight. If you did this, yes, of course we're going to take it off. So now, let's just think strategy. I was going to look at the chart, but the charts are so slow. There's no way VIX goes higher. So we're gonna take this off, and I'm gonna show you guys how to put on the opposite trade today. We'll just go the opposite way in case anyone thinks VIX is going to go down from here. Now, don't make this trade if you don't think the market's going to rally from here. If you don't think VIX is going to go down from here, I mean, get with me in Discord, and I'll show you how to do one, or we can do one like this for you if you think VIX is going to keep going this way. I just don't think so. I just do not think so. So anyway, if you have this on, take it off. But let's show how to do it in real life. So the first thing we're going to have to do is we're doing a reverse risk reversal. So we're going to have to sell calls to finance our puts. So we're going to do a bear call spread. It calls on the UVIX should be just jacked like anything, right? We're also hoping to profit from volatility coming in. You guys know how this works. I mean, we're hoping that VIX rallies on price, but also that we're hoping the market rallies on price and volatility goes down. But anyway, like I say, if you think the market's going to crash further, do not touch this. I mean, this will get beat pretty bad. But anyway, let's just go out to next week and see if maybe we mean revert a little while. So that one gives you a 7.9% buffer, $225 credit on $800 case. So that's a good base, 8.9% buffer to break even. That's a good base trade. Let's do it twice. And then we have to doing it twice to get some cash to finance our put, because these puts are going to be jacked also. But it kind of offsets because we're selling the call spreads to pay for the put. But we're going to add buy put. Then we have to decide how far out to put it. We don't want to put it too far out. We want to put it just right. All right. And just right is you let volatility, you let the market makers tell you let the option prices tell you where just right is. And just right's 38, which is ridiculous. There's no way it's going to go that far. You got to be kidding me. But according to the math, one standard deviation, it's fine. We're going to do it like that. Take your wife to dinner, $300 credit on, if you think the markets, if you think the bottoms, we're going to rally at least for a week. This only goes out till next Friday. We need to rally for a week in UVIX. Get your $200. You sold some options. It's your upside, your cap loss. I mean, you have $1,000. Think of it as like $1,000 short. If you could take that, you're the big short. This is $1,000 short. Anyway. So we're going to call this one shot. When I say shot, it means low percentage. It's just YOLO. When I say shot or yellow, this is a shot at volatility going back. All right. Anyway, I don't know if anyone's interested, but if to the one person that did that, congratulations. Let's see. Copy link. If there's a stock or anything you want me to look at, put it in the comments. I'll look at it. But otherwise, I'll let you guys get out of here. I'm going to take Jax for WALK. It's a pretty day here in Austin. There's a couple of trades. Retire. I appreciate you for being here. Might be buying in a lot of Bitcoin this week. I wonder if GameStop, those 3-leg risk reversals are perfect to do on GameStop. And I did a couple in real life last summer when it was in play. But by the time I did them, I think they lost too. But, and then I thought about putting on a reverse one. I don't know anyway, but if you could ever hit a freaking risk reversal in GameStop, it would be a beautiful thing. I think those risk reversals where you have to, it's important to remember, I like to try to only do them on assets that do have the ability to melt down or melt up. I don't think you need to do a risk reversal on Berkshire Hathaway, even though it is down 2% this morning, which is amazing, or I saw it was down 2% at one point. But I think they make perfect use cases. 3-leg risk reversals make perfect use cases for SPY puts, for hedging type situations, because hedges the reflexivity can kick in. The feedback loop can kick in. I try to get long the feedback loop. And that's why the feedback loop lately, as you guys know, has been negative. And that's why a few weeks ago or a week ago or whatever, I showed that trade. Anyway, we'll see how the opposite one works. We'll see. I just think it's time to go the other way. All right. Market's kind of stabilized on the 5-minute chart, where I show us trading at 51.87. It was really important we held 5,200, but what are you gonna do? Okay, so on the SPY, these charts are just so slow and bad, and I'm so zoomed out. But you guys can see this is the August lows right here. 513 or 500 is probably where we're ultimately, or where we're headed next, and we'll see. Take it one day at a time, right? All right, guys. I appreciate you all for being here. I hope you have a good day. Get with me in Discord. I didn't share the Discord link, but I have before. Anyway, get with me in Discord, and Have a great day, and I'll be back. We'll have a TGIF at the end of the day. All right, maybe even one at lunch. I'll talk to you later. See ya.